Welcome to our video on the OptionsPlay tool, which is available on the National Bank Direct Brokerage platform. OptionsPlay is an analysis platform that can help investors easily find bullish or bearish investment ideas and what option trading strategy they can use. This video will be on how an investor can use this tool for covered call writing. The tool can also be used to help you find potential stock and ETF ideas as well. To learn about all the possibilities with OptionsPlay, you can view the full video by clicking on the link which is available in the description below. To begin, to access the OptionsPlay tool, you must click on the Markets heading, then select the tool from the drop-down menu. Once the page is loaded, the first step is to type the name or symbol of the stock or ETF that you would like to write calls on. For the purposes of our video today, the symbol MEG for MEG Energy will be used. Our next step is to click on Show Trade Panel, which will open another section of the tool. We will then select the Income heading, which will direct us to the Income Option Strategy section. Now, before going any further, if you are unsure about some of the information on the screen, you can always click on Guide, which will drop flags into the screen. Simply hover the mouse over them and a brief explanation will be provided. Now, if we move our attention to the right side of the screen, we are being asked if we own shares of MEG. For covered call writing, the answer needs to be yes. But if the answer was no, OptionsPlay will propose a strategy for selling cash-secured puts. Now, before clicking on yes, let's look at the income settings below. When it comes to covered call writing, most investors will struggle with choosing a strike price and expiration date. This is where OptionsPlay will make your investment decision easier. The tool has a default setting for selecting the time frame and risk tolerance. Here we have a medium term and an optimal risk tolerance that seeks a balance between risk and reward. A shorter time frame can be selected or a longer one depending on your preferences. To the right, we have the risk tolerance. Here the investor could change it to conservative, which seeks to minimize the risk of losing the stock, or select aggressive, which seeks to maximize the premium received from writing the call option. Once the choice is made, we will save it as default. And going forward, OptionsPlay will make the covered call suggestion, taking your preferences into consideration. Our next step is to type in the number of shares you want to write calls on, which will be 200. Here we have the suggestion of selling 2 April 21st call options at a strike price of $26. Upon closer inspection, writing 2 covered calls would provide $80 in premium, minus the commission. We then have the max reward, which is the premium received and the potential capital appreciation of the stock from its current price to the strike price. Below we have the max risk. Next we have some return and yield calculations, the break-even price, and the number of days to expiration. Now I've saved the best for last. We have the POW, which stands for Probability of Expiring Worthless. For those of you who would prefer to hold on to your shares, a higher percentage is better than a lower one, but the premium received will also be lower. As a rule of thumb, if the POW is higher than 80%, the likelihood of losing your shares is lower. OptionsPlay will also provide a written explanation of the proposed transaction as well. Now, let's say you would like to change the expiration date or strike price chosen by OptionsPlay to see how the premium and POW are affected. This can easily be done by clicking on the Modify button, which will open the following. Here, we can change the quantity of contracts, choose different expiration dates. The ones with the W at the end are weekly contracts, and next to them we have the strike price. As an example, let's say I wanted a lower strike price to get more premium. I can make the change and all the information is automatically updated on the screen. We can see that the premium received has gone up while the POW has dropped. Moving on, some contract series are thinly traded and the bid-ask spread can be large. By clicking here, you can view the midpoint between them. Now, if you wish to proceed, we can click on Trade, and a summary of the covered call strategy pops up on the screen, validating the information. Now, in the bottom right corner, we have 4 circles, which can be green, yellow, or red. By clicking on Strategy Checklist, a drop-down menu will appear where OptionsPlay is reviewing the transaction from 4 viewpoints: the probability of worthless, the annualized return, whether there is an earnings date between now and the expiration, and lastly, the bid-ask spread. If we don't want to make any changes, then we can click on the Trade button, and a transactional ticket will appear with the option information already completed. We are left with having to select the account where the shares are located in. The ticket can still be modified, and the real-time quote can be refreshed by clicking here. The last step is to click on Submit, where a second pop-up will ask you to confirm and send the order. You are now in the current order section where you can view the status of your order. Our order has been filled because we selected the bid price, but if we had chosen the midpoint selected by OptionsPlay, the status of the order might have been open. If the order would have been open, by clicking here you could make changes to it. If we now head towards our account holdings sections, we can see that our 2 covered calls have been added to our portfolio and the premium received has been added to our cash holdings. As you can see, OptionsPlay takes a lot of the work out of selecting expiration dates and strike prices for investors looking to write covered calls. This concludes our video on how you can use OptionsPlay for covered call writing.